Sasol has been able to improve its earnings amid a tough economic environment and weaker oil prices. The energy firm has recorded higher profits despite lower turnover, headline earnings per share rising to 35 Rand 13 cents, and there are plans underway to mitigate an expected 1.4 billion Rand loss from the 30% US trade tariffs imposed earlier this month. Sasol remains one of the country's largest emitters of carbon, and it has committed to purchasing 723 million Rand worth of carbon credits. That is triple the amount it purchased in 2023. Sasol CEO Simon Baloyi joins us now to go through the details of the company financial results. Thank you, as always, for your time, Simon. Let's first talk through your highlights of this performance. What really stands out?
Afternoon, Tumisang and the listeners. What really stands out is the tenacity of Team Sasol to overcome the challenges that was on our way to still deliver strong free cash flow performance. You can see our cash flow performance is 75% up as compared to the previous year, and that has allowed us to reduce risk on our balance sheet. We were aiming, as per the CMD guidance, to come just below $4.1 billion, and our net debt added, excluding leases, ended at $3.7 billion. So we're happy with that progress that the team has made.
Interesting, but do also tell us about plans to increase renewable power generation, of course, with the aim to boost output. The end result of that, what's the expectation?
During our CMD in May 2025, we actually did unveil a new value-accretive decarbonization roadmap, and that entails us making sure that as we decarbonize Sasol, we can preserve jobs, we can preserve shareholder value, and we can transition in a value-accretive way. And to that end, we've continued to be the leading organization in the securing of renewable energy. When we last spoke in May 2025, our renewable energy commitments was at 755 megawatts, and we've since added in excess of 160 megawatts, and now it puts our total to 900 megawatts. And then the good news is, our third installment of renewable energy has come online. You remember we started with a solar power plant in our Sasolburg facility behind the grid. We then started with the Msenge wind farm, which is a 69 megawatt in the Eastern Cape. And in Damlakta now, we just started up a 97.5 megawatt solar farm, which is also online. So we're making progress in achieving our 2 gigawatts target that we said we will do by 2030.
Encouraging progress. And when you speak to the issue around job creation, especially looking to the near-term future and outlook of the labor landscape in South Africa, would you say that the domestic landscape is still conducive for business at the current juncture?
Yeah, absolutely. You will know that through the B4SA and the presidency, we are all focusing on energy, we are focusing on logistics, and we're focusing on crime and corruption. And that B4SA initiative is making sure that we can at least, we're all aiming an ambitious target of 3% job growth. So we need to get there. The unemployment in the country, whether you call the official or unofficial, it's actually a very high number. So all of us must contribute to that. And Sasol is at the forefront of making sure that as we transition our company, we do it in a just manner that continues to secure economic growth and job creation.
You've also cited plans underway to mitigate the 30% US tariffs. Talk to us a little bit about how that particular strategy is going to take course.
Yeah, Sasol does have, like many other companies in South Africa that are exporting, have a US exposure. That is between 80 and 90 million US dollars exposure that we have as per the 30% tariff. So we are, working on plans to mitigate it. For up to so far, today we did indicate that we've already mitigated, $30 million, and we'll continue with plans to mitigate the remaining gap. And then what we're doing, firstly, is to focus on, price increases with the customers. We'll be doing that. We're also going through a list of all our products to identify products that are exempted. We will continue working with our American counterparts to do that. And finally, in terms of what you can get in terms of duty, clawbacks and reclaimables, we'll be also, focusing on that strategy. So we're doing that. We'll also continue to explore if we can mitigate further by going to other markets. But you have to then look at the netbacks and price realization as we do that. But the team continues to proactively manage the impact of the tariffs.
On the back of that, and as a parting shot, we know that the South African government has indicated that negotiations continue, deliberations and trade talks with the U.S. What would be the ideal outcome for business in this case?
The U.S. continues to be a very important partner for South Africa. If you look at, the fact that we've got more than 600 U.S. companies in the country creating jobs. And we also have companies like Sasol, not only Sasol, that has also invested in the United States. So for us, we see this as a speed hump on the journey between the friendship between these two nations. So for me, dialogue must continue. As long as dialogue is open, hopefully we find each other. But as business, we have to make sure that we proactively deal and mitigate the potential impacts that can come. But I think Team Sasol is ready for the challenge ahead.
Thank you so much, as always, for your time. Simon Baloyi is the CEO at Sasol, speaking to us about their latest financial performance.